Can you hear me now? Test, test, test. All right. I did not notice that somehow when Windows updated last night, it deselected my main microphone. It's awesome. Let's start over. So there's 4 minutes of blank so far. I apologize for that. Let's start over. Thanks for joining me again. It's Thursday. It's 8:05 a.m. at this point in Chicago, Chi-Town, on the 19th of July, 2018. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The market posture this morning is for risk off. Gold is the drag this morning, down $13.10. or 1.07%, followed by the pound off 95 pips. Crude oil's off 50 cents or 0.7%. The leader this morning is the U.S. dollar up 53.5 cents or 0.56. The Treasury bonds are up 3 ticks and the Eurobond is up 5 ticks. So even though risk is off, I'm just not seeing allocation to safety, heavy allocation to safety, barely up on the safety instruments, the bonds. I mean, the 10-year note is down half a tick. So is the Japanese yen. The S&P is trading yesterday's lows. The S&P is off 8 points or 0.28%. So it seems like risk is off. And that's the sentiment we're coming in with today. I believe there were some misses on the UK retail sales and some comments from Chinese officials that despite what the White House says, that they do want to avoid a trade war, but they're hunkering down and have the ability to fight one out if needed. Just stupidity by all. So that's where we stand. Let's as far as what's going on this morning. About a half hour ago, we got U.S. initial claims came in at 207 versus 220. Now, I don't want to review the calendar because everybody has access to a calendar. If you don't, just drop me a note. But initial claims came in at the lowest since 1969, since December of 1969. Continuing claims came in a little higher. Philly Fed came in higher. And there's commentary from Commerce Secretary Ross on the auto market in the U.S. We also have leading indicators at 10 for June, expecting 0.4. That could be a mover. And then other than that, there's really nothing on the calendar. Let's take a look at what we expect for today, or what we expected yesterday, I should say. Here's what we're looking for yesterday. The main idea yesterday was for the market to go sideways, open auction in range. We were opening right up against the prior day's point of control, Tuesday's point of control, 28.1150 or so. And I was looking for a higher high over Tuesday's high. Remember, I marked this as a week high, and for the market to roll over. The secondary is to test up, go down into 28.06 quarter and potentially push to 28.04 quarter. And then the third idea was to test down this key LVN right here, this key price, which was 28.0950, and then rotate back up and push through the gap zone. The gap zone goes from 16 and a quarter, 16 half to about 21. Mid gap is 18.75. What we got was a combination of a bunch of stuff. So we got the higher high, we got the push up, we got the test down. So we tested down per scenario 2. We got the push up to a higher high. It was a mix of things. Here's what actually happened. Market opened. We had a clean and clear open auction type opening with an opening swing high and a low that were very, very obvious, 28.14 to 28.10 and a quarter. And then from there, we drifted down into this 28.06 area. It was 28.06 and a quarter yesterday, adjusted that up to 28.0675 on the stock zone. So we ended up pushing down like scenario 2 looks at. The next area would have been 28.04 and a quarter. Why aren't these marked? Let's fix that. Yeah, 28.04 and a quarter. And then it turns around. So to me, this looked like pullback to mid, sell mid, look for continuation lower, look for 28.04. That's a key trade at that point. Nope. Comes right back up. And then what do? We extend the range up. We have an upward range extension, just like we have had for the last couple of days. And it pushes right up into the gap zone, this gap zone right here from February 2nd. Remember, the gap mid is 18.75. Where's the high? 18 and a quarter. It stopped 2 ticks short of the gap mid. So we are cutting into the gap zone. And remember, just because we're cutting into the gap zone, we don't shrink the gap. And the reason I don't shrink this gap to represent now everything from 28.21 and a quarter or so to 18 and a quarter, because that shifts the mid of the gap, and we want to track how the gap is getting filled. So that's what we've got. We have somewhat of a double distribution profile, and we've seen many double distribution profiles on this rally with the point of control in the upper quartile of the range, meaning the most trading occurred near the high. So what we have in the overnight is a weak high, and in this context, a weak high is expected to extend the range in the extended hours, but it did not. We have a lower high on the overnight. The overnight high is 28.18, I believe. And the market has fallen, and it's currently trading at 28.08 with a low of 28.06. So we've taken this push up all the way back, and we are starting from the bottom today. Not that I care which way it goes, but it just makes it harder to read. It provides conflicting information. So let's look at the overnight session. Here's the overnight session. So the overnight is this right here. This is the overnight. This is yesterday's RTH or pit session. So this is pit right here, and this is overnight. Okay. We reopen. We test up to 18. Remember, the high expectation of 18 and a quarter being taken out did not happen this time. And then it starts to drift down. The Europeans get in here at this point, and from there it's sell. Some disappointing numbers out of Europe. And what we have is a very weak low with the point of control at the low, with pretty decent volume, 138,000 in the overnight session. It's also shown here. 138,000 versus 110 expected or common or the mode. And we're extending. We tested below yesterday's low, 28.0675, and we've pushed to 28.06 and a quarter in the overnight session. And that's how things are shaping up. So overnight inventory is mostly short. We're way below yesterday's closing price of 28.1575 on good volume. We're below mid. We're below VWAP. the multi-session VWAP. We're in the point of control area. The point of control is near lows with a weak low. What is that? What is that a prediction of? It is likely to continue lower. And remember, the next area is 2804 and a quarter below. But to me, it looks like there has to be, could be a good opportunity for buyers to step in and buy cheap prices. Remember, this is an auction. Crude is popping up pretty good here. And so overall, the delta is a seller. It just seems sellers are dominant. Risk is definitely off this morning. Okay. And so as we continue to trade near this low, see this low here? If this low was too cheap, the market would come down and it would immediately bounce off because it's too cheap. But if the low gets traded, and then we just trade and trade and trade and trade the low, that low is not too cheap. It's not being seen as too cheap by buyers in this case, or even sellers, because, hey, why should I sell my contracts cheap? And so it is likely to continue lower, and that's what constitutes a weak low. This kind of tests a lot of volume at the low. I'll show you that in numerical format. Here's the volume scope, okay? And what the volume scope is showing us is what trades at each bar. This is a point and figure, quarter by 7. And if you look at what has traded near the lows, the profile here is very weak. And you see this, a lot of exchange happening at the low, with the delta being mostly negative, mostly sellers activated in this area. But it's printing 562 in a low. It's printing some big numbers, relatively big numbers for the overnight session on the low. This isn't coming down and trickling down to nothing and then bouncing off. It is standing at the low. And so that tells me that we're likely to see that low get extended farther. Okay, so that's how that's shaping up. It's muddying up the water. The fact that we are doing this is making things a little murky. So for now, anything below 28, 12, 12 and a half, 13, I'm going to expect continuation on to the downside. Now the overall, channel is intact. Buyers seem to have it. We're pausing a little bit. You can see how it's climbing and it's making kind of it's plateauing a little bit, and now it's going lower. We have ended the one-time framing up back here on Tuesday, and we resumed one-time framing up yesterday. And if we break this low, then we are likely to end that one-time framing again. And what this is showing, in my opinion, what it is showing is that it's weakening as it goes higher. As it's going higher, it's having a harder time running up, and so that's something to consider. Now let's look at what we expect for today. The range is continuing to compress overall for this product. This morning, with inventories being short mainly, with a weak low, the expectation is opposite of what you'd think. Open auction and range out of value. I expect a response. I'm looking for a response up to this 28.12 area. Looking for an impulse down, and I'm looking for this to extend lower. And if you notice, as we extend lower, I talked about this yesterday, we have this very thin flagpole underneath, and the balance of that is 2,800, 27.99 and a quarter or so. And so selling this morning is likely to retest this 2,800, poke through, and then ultimately, remember I talked about repair yesterday on Tuesday's rally. Tuesday's rally ran off pretty quick, left a lot of single prints behind on the market profile, and some poorly auctioned areas. So overall, I expect today to roll over and pull back to 2,800 as the main trade idea. Now, this will force me to sit out the open, because the alternative is an open auction that drifts down, gets into the overnight low, impulses back up, and pushes through this 12.5 area to respond back into 28.16, and we end up consolidating at 28.16 and continuing our journey higher. That's the secondary scenario. So I have to see. It's unwise of me as a trader, unless I'm scalping, and I just don't discuss scalping because it's a whole different ball of wax. It's unwise of me as a trader to not wait and see what it does with the low. Who is participating right at the open? Do we get responsive buying? In other words, do these guys rush in and see this is cheap and they just push, and we have a bit of a drive, like an open rejection reverse, open test drive? I doubt we'll have an open drive type opening. If you don't understand the opening types, just go to convergenttrading.com and find the glossary, and it's all there. So if responders come in, then I know that I need to jump in, scale out ahead of 12 half or so, but really hold for 1675. And then, so I'm not going to get shaken out for 2 ticks or something. I'm not going to get in and get shaken out. Now, if we start to push towards 12 and then we get an impulse down, in other words, sellers just come in and just smack all the way back through the open. Now I'm looking for a pullback to get short, break the overnight low, and now my targets are 4.25, 2,800, get out ahead of 2,800, 27.99 and expect it to balance there. Okay, and so if it does not rebalance above 2,800, then it's very likely to test this 90.25 below and then start to work its way lower. In that way. However, since I cannot predict what the market will do, all I can do is respond to it. I've got to keep an open mind and just respond to what is there, using context, order flow, and all the good stuff that I talk about. Those are your 2 main ideas for today. 3 and 4 are tests and drives in both directions. So it's all about what the market does. So really, I'm not going to be participating in the market for the first 15, 20 minutes at least today. And we have leading index coming in half hour after the open. So you need to keep an eye out on that if you plan to initiate. Hopefully you picked something up. Good luck.